Saylor, the CEO of MicroStrategy. He's the man who convinced Elon Musk to take Tesla dollars or out of US dollars and move it into Bitcoin. We know what's happening to the US dollars right now. His company holds over $2.5 billion in Bitcoin, and he is the champion of the Bitcoin standard. Michael is now the guest on my show. Michael, welcome to the show. A real treat to have you here.
Thanks for having me.
Real pleasure. So let's talk about, I want to get your take on some news of the day before we kind of get knee deep into gold and where you see Bitcoin going and some of the cryptocurrency standards moving forward. But this struck my eye this morning. This is, to me, something I talk about on our show all the time about, poor people just getting screwed over by central governments and fiat currency. And this was the news of the day today as Venezuela as Venezuelans are taking refuge in cryptocurrencies, moving out of their fiat currency, but we're seeing more and more of this. What's your thought on people there who are living in tents finding refuge in Bitcoin and crypto?
Well, I think that it's a basic human right to property. And what property really means is the ability to store economic energy over time in order to sustain yourself. We know there's 1.7 billion that are unbanked. And if I really wanted to wreck your life, first I would take away all your money. Then I would take away your banking account. And then I would collapse the currency that you work in so that even if you do make $100, it's only worth 50 next year and 25 the year thereafter, and it buys nothing in 36 to 48 months. So if you look at the plight of Venezuelans, they've got a collapsing currency. Many of them are unbanked. And of course, the property that they could hold in the country isn't holding value. So what I think is that Bitcoin represents hope to billions and billions of people around the world. And the right to property is a basic human right. And if we take away a bank of economic energy from humanity, it's the same as sentencing them to slow starvation. So obviously I'm a big believer that Bitcoin, is critical to spreading human rights around the world. And what you see right now is that in countries where the currency is collapsing, the banking system doesn't work, then people are turning to Bitcoin and they're using their mobile phones to hold a crypto asset in order to protect themselves.
Yeah, in order to take care of their family, moving away from their country's currency as their country continues to print more money, devalue, debase the currency. Do you think that that's why some of these central banks are pushing back on Bitcoin, on cryptocurrency? Are they scared?
I really think that most central banks view it as an asset, a crypto asset, and so I think there's a narrative in the community that central banks are pushing back on it. I really don't think they are. If I look at all the utterances, I think Mark Carney has said on the record it's a crypto asset. Jerome Powell has said on the record it's like digital gold, it's like an asset.
Yeah, he sees it as a store of value.
A store of value. The
Right.
deputy governor of the Chinese central bank has said it's an asset. Christina Lagarde of the EU central bank has said, yeah, it's an asset. I mean, they might say it's a speculative asset, but currency is a medium of exchange, and it's the province of governments. And in order to be a currency, you have to be deemed non-taxable upon transfer. And Bitcoin is not. Bitcoin is deemed property by the IRS, and most countries deem it as property, which makes it an asset, not a currency. So I think that the way the world is evolving, we're going to see 5 billion or more people with mobile phones and mobile wallets. And in that wallet is going to be a selection of currencies and a selection of assets. And the strongest currency is the dollar. And the strongest asset is Bitcoin. And in countries like Venezuela, they're going to lose their currency privileges, and their citizens are going to default to the dollar as a medium of exchange. But the only way that you can deploy dollars as a medium of exchange to billions of people across hundreds of countries and tens of thousands of banking systems or application networks is if you have a global settlement network, which is a shared monetary protocol, and that is Bitcoin. So Bitcoin is the global monetary network that allows everybody on Earth to store their economic energy over long periods of time. And it also allows everyone to synchronize those mobile wallets in Zimbabwe and Venezuela and Nigeria and India and Argentina and the US and China and the like. And so I see an emerging economy with a digital asset called Bitcoin and a digital currency, likely the dollar, but if not the dollar, perhaps the renminbi, right? And if not the Chinese currency, then perhaps the euro. At the end of the day, the winner is going to be the strongest currency, which will come from the strongest country and the strongest economic network, which will be the US. And the winning asset will be the strongest crypto asset with the greatest security and the greatest acceptance and the most stability, and that will be Bitcoin.
So is it wrong then to be calling them cryptocurrencies?
Yes, it is wrong. Most sophisticated people that have studied it realize they're crypto assets. Bitcoin is a crypto asset. It's not a cryptocurrency. It's a tragic misnomer. And because people call it a cryptocurrency, then it lends itself to a shallow criticism that it's not good as a currency because the central banks will ban it and because the tax treatment is poor and because the transaction rate is low. But again, those are all red herrings. It's not a currency, nor does it need to be a currency, right? Anybody thinking about it for even a few seconds realizes that if there's a taxable event every time I transfer it to you, it can't be a currency. So right. So no, it's not a currency. It's an asset. And if you think of it as an asset, it's very helpful because then you realize it's not competing with the dollar and the euro. It's competing with gold and silver. It's competing with bearer instruments, and to a certain degree, it's competing with bonds as a store of value, and it's competing with ETFs like the S&P 500 index as a store of value. And once you understand it that way, then you're not so afraid anymore because you understand the regulatory framework that comes to Bitcoin is the same regulatory framework that comes to gold, silver, and S&P 500 indexes. It's just know your customer, anti-money laundering regulations. And if you're afraid to buy Bitcoin because you're afraid of regulation, you shouldn't be. Because if it is regulated pari passu or at parity with these other assets, it will create an avalanche of institutional money flow into the asset class because it'll simply normalize the treatment in the Western world. The IRS in 2014 deemed it to be property.
Right.
But and as property, it means that when you transfer it, you owe a capital gains tax. So there is like zero chance the IRS is going to reverse that. It is property. It's not a currency.
And if you don't report it, it's a felony. This is the problem I think I wanted to touch on a little bit is that I think you see a lot of these crypto billionaires and millionaires on YouTube and other places where buying flashy cars and so forth. And if they're using their crypto in order to buy those things and they're not reporting it to the IRS, that's a huge mistake.
Yeah, it's not very wise to transfer Bitcoin to pay for anything. I mean, if you were to say to me, I can pay you in Bitcoin, it doesn't make a lot of sense because the transactions are slow. But if I had highly appreciated Bitcoin, I would be accelerating a short or long-term capital gains bill in order to pay you. And so the only way that I would pay you in Bitcoin would be I would take $100, I would buy Bitcoin, and then 1 minute later, I would transfer the Bitcoin to you so that the basis in the Bitcoin is equal at the time I acquired it and the time that I transferred it. So I think that this is a vestige from the first decade when there are a lot of retail users of Bitcoin and before they understood the law. But the law has been very clear in the U.S. since 2014. And any institution, right, any high net worth individual, any corporation, any institutional investor understands that you acquire this stuff, you're going to hold it. Now, I'll make one more point. It doesn't make any sense to pay for anything in Bitcoin for two reasons. The first reason is because it's a taxable event. And you're a fool to accelerate taxes on your own person by a decade. The second reason it doesn't make sense is because it's a long duration asset that's deflationary, which means it's likely to go up in value. It's been going up 150 to 200% a year every year for a decade. So why would you pay $1 million in Bitcoin to buy something which is going to depreciate in value when the $1 million in Bitcoin may very well double 1, 2, 3, 4, 5 more times, right? So it's a long-term investment asset. A much wiser course of action would be to borrow money against Bitcoin. If you have an appreciating asset, never sell it, finance it. And if the asset's appreciating at 20% a year, and if the interest rate is 5%, then it's pretty obvious what you ought to do is keep the asset, pay 5% interest, because the tax bill on money that's borrowed is zero. So you could live off of your borrowings against your appreciating asset for the rest of your life, without ever paying the asset back, without ever paying the loan back, and without ever paying any income tax, and without ever paying any capital gains tax in the U.S. Other tax regimes may be different, but in the U.S. right now, that would be the treatment.
And I hope my audience is paying attention because that's exactly, I mean, the brilliance of you and what we try to teach here on the channel about, I mean, that's why I'm a long-term buy and hold real estate investor, because you're not paying the taxes on the debt. And that's how you can build wealth appropriately and using it that way. So don't be just selling your Bitcoin and buying Ferraris with it. Don't be a knucklehead with it.
If you desperately need a Ferrari, you're better off to borrow the money against the Bitcoin. Like you can be rich with a Ferrari, a yacht, and a jet. You need to have borrowed the money against a tangible asset, which is going up in value as the money supply expands, in order to keep and pay for the Ferrari, the yacht, and the jet.
Exactly. Are there any alternative coins, any altcoins that you invest in or you're bullish on when you look at, I mean, I don't know, look at any of these that are out there right now? You're looking at Cardano or Ethereum. Are you just strictly?
No, they're all ventures, right? I mean, Bitcoin's the dominant crypto asset. Ethereum is the dominant crypto application. You can divide the entire universe into some segments, and Ethereum is competing with Binance Smart Chain and Solana. That's very competitive. They're very complicated. They're very centralized, much more centralized than Bitcoin. They have to be centralized because they need to run on proof of stake networks because they need the speed. Mm-hmm. So proof of stake itself is orders of magnitude more centralized than proof of work because you don't have these sprawling networks of miners with their ASICs everywhere on Earth sucking up energy to keep any one person from getting control of the network. So Bitcoin is like the dominant winner of sound money. These other things, they're just very risky. They could crash, one could win, one could lose. Ethereum doesn't even run on proof of stake yet. So, basically you don't know when they turn on proof of stake, the entire thing's not going to go in some bizarre way, right? What'll happen? You don't know.
Interesting.
So let me say it a different way. If you're a crypto investor and you run a venture capital fund and you want to make investments with high risk, high reward, and you want to study it and you want to take the risk, then you can trade in those things. But in my opinion, they're 100 times less lucrative over time, and they're 100 times more risky. So it seems like it's a 10,000 to 1 difference. I wouldn't do it, but other people do it, and it's probably good for the industry because it markets the industry, right?
Right.
And they're venture capitalists; they have to do it. Like, I'm not gonna,
Right.
I'm not gonna tell them not to do it. It's like this is one risk tranche. This is a different risk tranche. If you're super smart, and if you get, if you guess, will it be Binance Smart Coin or Ethereum, or maybe it's both, maybe you trade. But when you get into that, you get this question of, well, when are you going to take money off the top, and when are you going to diversify, and are you going to be in it forever? I
Right.
I tend to think I would prefer to invest in things I can hold for a decade, if not 100 years.
Right.
But there are plenty of people whose job is they're venture capitalists. And the venture capitalists are betting on things where they think there's a 90% probability it'll fail, but they think that they'll get a 100x return if it hits. So it's a different thing, right? So I
Right.
would say it depends on your portfolio of money. Like, what
Right.
kind, are you investing someone else's money, your own money? Are you a VC? Are you a private equity investor? Are you a saver? Converts their money into a strong currency. An investor manages a portfolio of risk. I buy some Apple, some Facebook, some Google. They've all got risk. A trader manages a portfolio of risk derivatives. I'm guessing, I've got options in Apple, and I think that Apple is going to beat on the next quarterly release.
Right. Right.
It's not even a portfolio of risk over a decade. It's a portfolio of risk over 90 days. Or it's the second derivative of risk. I'm like shorting Apple options against Google options because I think the spread is coming in, and it's something you can do.
Right.
It's just a different thing, right? I'm arbitraging people's risk derivatives, and fine, knock yourself out if you're bored, if it's your profession. But another analogy is like a decade ago, if you bought Apple and Amazon and just held them, you probably would have made a lot of money. You would have made 10 to 20 extra money. Now, if I could go back 20 years or 10 years, would I give people advice about when to buy and sell Apple in the year 2012? Or how to trade Apple options against Amazon? Should you buy or sell Amazon in the year 2014? Can you remember off the top of your head whether you
No.
should have bought or sold Amazon in 2015 so you could buy it back cheaper in 2016, or did it?
Yeah.
By the way, if
I have no
you
idea.
had, Jeff Bezos was at war with Donald Trump before the election. And so what's the worst thing that could happen to Amazon? You would think that it would be Donald Trump getting elected, right?
Right.
But if you had actually sold Amazon once you know that Donald Trump was getting elected, it would have been the most catastrophic decision in your life, because Amazon stock doubled in the first 12 months after Donald Trump was elected. You understand what I'm saying?
Right.
It's like you're a trader and you know the future, you'll probably still lose money. Because the best thing that ever happened to Jeff Bezos, Jeff Bezos, his greatest enemy got elected president. Jeff Bezos' stock went from like $800 to $3,200.
Mm-hmm.
Okay, Jeff Bezos got divorced. Is that bad? It should have been bad for Amazon. Didn't seem to be bad. It was good for them. Like all sorts of, it's hard to predict what might be good or what might be bad. You go back a decade, and if I told you, I think Facebook, Google, Apple, Amazon are good companies, what's your best strategy?
I have no idea.
Well, it's simple. Buy it and hold it.
Oh yeah, just buy and hold it, I guess. Yeah.
Buy it.
Yeah, because you could have these ups. Is Facebook going to be affected by Amazon's privacy and their new iOS update 14.5? How is that going to play out?
Your best strategy would be to buy it and then mortgage your house and buy some more. Like, don't trade it on margin, where
Right.
if you get a 20% drawdown, you get liquidated. But mortgage your house, mortgage your car, mortgage your company, buy Amazon, Apple, Facebook, Google, and wait. If you can't raise debt, then take all your money in your piggy bank and buy and wait. And all this, and by the way, if you basically just bought them and turned off the television and
Right.
didn't read a newspaper for a decade, you'd be better off.
Yeah, and don't pick up the Washington Post, which in the interim was purchased by Amazon.
Yeah, because everything that you read is just calculated to give you anxiety and hysteria
Hmm.
and get you to trade or hedge your position.
Right. I want to ask you about Janet Yellen. Yesterday, made comments that sent the markets into a nosedive. Nasdaq dropped pretty big yesterday on her discussion of having to possibly, increase interest rates here to help stabilize things. Then she walked it back a short time later. All of this, of course, around the idea of inflation and Jerome Powell saying we're going to let this run hot for a while. So, how does Bitcoin, how does cryptocurrency fit into this inflationary discussion right now?
I think Bitcoin is the best monetary inflation hedge in the world. If you know that the central banks are going to expand the currency supply, then the most important thing you can do is construct a portfolio of high quality assets that are scarce, that are going to appreciate in price at a faster rate than the currency supply expands. And so that means Bitcoin, because it's ultimately scarce and fungible. You can transfer it anywhere in the world, and people with money are always going to want it. And after that, perhaps clearly the home that you want to live in the rest of your life, trophy real estate that has tangible value to you, perhaps trophy art, a Mona Lisa, something which is extremely scarce, a Van Gogh painting. If the currency supply increases by a factor of 10 and you have a very scarce piece of art, presumably the price of the artwork is going to go up. The best thing going, of course, would be scarce assets that you can finance. So if you have a home that you love and you can get a 2.5% mortgage for the next 10 to 30 years against it, then it makes sense to maximize the mortgage, hold the property. When the money supply is expanded by a factor of 10, if your home is in a place where no one else wants to live, it won't go up by a factor of 10 because it won't be scarce. But if you've got 3 acres in the Hamptons on the beach or in Palm Beach, right? If you live in a truly desirable community, the price of the home is going to go up. And as the price goes up, your loan's going to be fixed. You'll be able to refinance the home. You've got leveraged equity, if you will, or leveraged property. I think Bitcoin fits into that. Bitcoin is appreciating at the fastest rate, faster than the Nasdaq or the S&P or luxury real estate or average real estate around the country, because it's the most scarce, most desirable asset. So that's how it fits in.
How do you see what is the exit strategy then for Bitcoin for you with
There
your
is no
whole
exit strategy.
no? And I mean, do you think that we'll see some sort of a Fed vehicle like the 1031 exchange that would allow you a move out of something like this into something else, a like in kind asset? I mean,
See, the point is, why would you exit from the best investment asset in the world if it keeps getting better? Like, there's nothing you can buy that's better. So you're selling the winner to buy the loser. If let me make it simpler. If you owned a company in Venezuela, and the company sold anything, and you got paid in bolivars,
mhm.
and you decided that, and you knew that the bolivar is going to keep falling at like 20-30% a year, and you roll the clock back 20 years. If you were unwise, you just keep working, and eventually your assets go to zero. And if you were smart, you would convert your cash flows into US dollars and put it in a bank in New York City. Now, when would you exit from the dollars in New York City and trade back into the bolivars in Venezuela?
Right.
When?
Unless if that became a standard, if that became the leading currency in the world.
What if the United States government said, well, you can do it tax-free? You're still not going to do it.
No, right, exactly.
Right? I mean, and that would be the case for any weakening currency in Argentina. And if you're in Zimbabwe, when are you going to exit your U.S.? If you basically bought, a New York City apartment and companies in New York City, and you're a billionaire in the United States, when are you going to sell all that and reinvest it back in Zimbabwe? You're
You're
not
not.
ever,
Right.
right?
So you would
So,
just hold
because
this.
the point is, one of the assets is stronger than the other asset. If Bitcoin is capped at 21 million for the next 1,000 years, it's only going to get more valuable, right? You can make more apartments in New York City. You can print more US dollars. You can create more houses on the beach. You can create more artwork, give me something which is scarcer than pure monetary energy on the dominant global digital monetary network. There's not ever going to be anything. Like 100 years from now, there won't be anything, right?
Right.
It's not like buying, you could say it's like buying a block of Manhattan 200 years ago, but it's better than that. Because if you bought land in Manhattan 200 years ago, when would you sell it? To buy land in Kansas? Why would you ever, right? You wouldn't ever sell it. But this is better than that, because this is one city in cyberspace where 5 billion people are going to live there. You don't need the second city or the third. Right. Like whereas you can make the argument that, well, you need a Tokyo and a London and a Paris. But in cyberspace, people in Tokyo, London, and Paris and Manhattan are all putting their money in Bitcoin. So this is it's a global dominant pure monetary energy network. So you don't need an exit strategy, right? Diversification is selling the winner to buy the losers. Right. You're not getting it's like an exit strategy from a country where the currency is collapsing. You're reinvesting back into a place that's weakening. So the right thing to do is the opposite. And what you should expect is an inversion of the entire financial order. As Bitcoin grows, you're going to see people sweep greater portions of their investable assets into Bitcoin, and the entire ecosystem will reorient where Bitcoin is the center of the universe. And at some point, Bitcoin becomes $100 trillion to $200 trillion of an asset, and everything else is a derivative of Bitcoin. It's basically synced to the Bitcoin standard.
The Bitcoin standard, and holding it forever. I mean, there is no exit strategy as a store of value. I mean, so you truly see it as the ultimate store of value then?
There's nothing better, you see?
Yeah.
Like, Bitcoin is a crypto asset network engineered to be the ultimate long duration safe haven asset. All the things about it. For example, the 21 million hard cap protocol, that's critical. The proof of work mining network, that's critical. The fact that it's thermodynamically sound with an open permissionless protocol, that's critical. Is there anything better than that on Earth? No. It's 100 times more powerful than the next closest like-kind thing. So you're not going to, the world's not going back to a gold standard, because gold isn't a network and it doesn't have a protocol. You can't synchronize gold on 5 billion mobile phones every second, right? You're not going to go to a silver standard. You're not going to go to uranium or lumber. So what are you going to do? You're going to use sovereign debt? No, because you can't synchronize U.S. Treasury bills onto 5 billion mobile phones in Zimbabwe. It's illegal to do it in Nigeria or Venezuela. It's not going to happen, right? What are you going to do? ETFs? Nope. Another crypto? Well, there is no other crypto that's got the proof of work, stability, and security of the Bitcoin network. So there isn't anything, right? So that's why you don't trade in and out of it. You buy it, and then you hold it, and you just let nature take its course, because the monetary energy in the world is just surging into this network as people realize it's the strongest monetary protocol and the strongest monetary asset in the world.
I want to talk a little bit about gold. I know you've had great debates on gold and why you see Bitcoin as a far greater store of value. You've mentioned it just here a few minutes ago, but let's talk about that. You have a lot of gold bulls who see gold running up to $2,000. It has becomes, scarcer. I mean, people say it's the scarcest resource, but perhaps Bitcoin as a digital asset is scarcer. Where do you come down on this great gold debate? Do you see it close to gold? Is gold a close second in any way?
No, I think that the people that buy gold believe in sound money and they're idealists, but they're being tragically misled by gold promoters. Most of the people that are selling gold don't actually own the gold that they sell. The gold miners are all short gold. They dump gold on the market as fast as they possibly can. And no, none of them hold gold as a treasury asset. None of the gold promoters hold gold as a treasury asset. I don't think you can find a single gold promoter that has more than 51% of their balance sheet invested in gold. In fact, most of them on the record either say they don't own any gold, they just own gold miners, or they own no more than 10%. So the people that own more than 50% of their portfolio in gold are idealists. But the problem is gold is a defective asset on a non-existent network. Why is it defective asset? Well, I mean, it peaked in the 19th century, but it's not thermodynamically sound. You can make more gold at the nature level. The miners keep dumping gold on the marketplace. They spend $100 billion a year to dump gold on the marketplace. The difference between that and Bitcoin is Bitcoin is capped at 21 million. Gold is infinitely increasing in supply. I mean, the second reason it's defective is because there's like 90,000 tons of gold sitting in jewelry. So whenever the price goes up, people melt down their jewelry and they recycle gold to drive the price down. The third reason the asset's defective is because there's no protocol to synchronize paper gold or the gold applications at the banking level with the underlying physical gold, which means that paper gold or gold derivatives can short the physical gold 100x or more. That means that as the price of gold goes up, gold bankers and gold sellers keep dumping more gold paper on the market to hold the price back. So I would say gold is hopeless. It's really a tragic, hopeless asset. And I think that the people that are buying it are getting misled by promoters. Most of the promoters get a commission to sell it, or the gold miners are making money selling it. But think about it for a second. If I passed a law making gold mining illegal everywhere in the world, what would happen to the price of gold? It would presumably go up, wouldn't you think?
Yeah, it would skyrocket.
Okay, well, the point is Bitcoin is capped. And so gold is competing as a sound money store of value against something which is capped. Gold is a commodity. Commodities don't hold value, right? You might as well invest your money in wheat or corn or coal or oil. At the end of the day, the reason they don't hold value is when the price of the commodity goes up by a factor of 10, everybody on earth scrambles to invest in more machinery, more manufacturing capacity, and they recycle and they dump and they short the commodity. That's why it's a commodity. If you want to, you don't really want to store your money for 100 years in silverware or something that's used as an industrial metal, or something that's gold and silver used as industrial metals. If you want to store your money for 100 years, you want to put it in a pure monetary asset which cannot be debased or inflated or manipulated. The thing that's special about Bitcoin is it's an asset plus a network plus a protocol. The asset is capped at 21 million and is only going to shrink. It can never go up. People can lose their Bitcoin, but they can't create any more. The network is an open network, which means I can move a block of $1 billion of Bitcoin from here to Tokyo in an hour for a few dollars. And, that'll eventually be moving $10 billion and then $100 billion. So it's a very powerful final settlement network. If you wanted to move $1 billion of gold from New York to Tokyo, you're talking 3 months and $5 million. You can't. So gold is tragically centralized. There is no network. And then there's no protocol. The protocol of Bitcoin means PayPal can integrate 330 million mobile phones into an underlying Bitcoin network and keep them synchronized with integrity. You can withdraw your Bitcoin off the custodial exchange, and that means that the exchange can't go 100x naked short on the Bitcoin. If they do, there's no fractional banking, or it's fractional banking at your own peril in Bitcoin, because look, my company doesn't have 2.5 billion worth of Bitcoin. We have like 5.5 billion worth of Bitcoin. We can take it anywhere we want to any exchange in one day. So if you were to, and we've got it in cold storage. So if I had $5.5 billion worth of Apple stock, then the bank could short it and lend it out to drive the price down. If I had $5.5 billion worth of gold, it'd be sitting at a bank, and other banks and bullion bankers will write derivative contracts against it and short it, and they're working against me. So the problem with gold is the gold miner, if you decide to invest money for 100 years in gold, the gold miner's your enemy. He's going to take 90% of the value by inflating the price of gold. The gold banker is your enemy. They're going to hypothecate it and dump derivatives. And then the government is your enemy. If gold gets too high, they're just going to sell their reserves or short it or seize it. Because you can't, try leaving the country with $100 million of gold in your pockets, right?
Right.
It's not going to happen. So ultimately, this is why the gold standard failed in 1914, and why gold reserve standards, they just don't work. The reason that Bitcoin standard will work is because the custodial rights of 5 billion people are unprecedented. There's never been a property in the history of humanity that gave the people more custodial rights. If you have a $50 Android phone in Zimbabwe, you can walk around with $10,000 worth of Bitcoin in your pocket and nobody knows you have it. And even if I hold a gun to your head, if I shoot you, I'm still not getting it. If I firebomb your house, I'm not getting it. I can't take it away from you. And if you have 1 minute notice, you can zap it to the other end of the earth. So you can't do that with land. You can't do that with cattle. You can't do that with gold or silver. You can't do that with a stock or a bond or a piece of commercial real estate. You can't do it with a pile of cash. What's better, right? And the answer is nothing. And so if you want the Bitcoin standard to work where the gold standard failed, the key is the protocol and the network, because the network guarantees that anybody that holds substantial amounts of Bitcoin have custodial privileges, and they can move it between any jurisdiction and any custodian in order to avoid counterparty risk and avoid being victimized by the custodian or the province of custody. If New York wants to tax it, I can move it to Wyoming. If Wyoming wants to tax it, I can move it to Switzerland. If I don't trust the bank in Switzerland, I can move it to Singapore. And if I don't trust anybody, I can move it to my own phone. And if I don't trust my phone, I can memorize the seed phrase and put it in my head. You can't do that with anything else ever deemed property in the history of the human race. The thing that causes the asset to hold its value is the fact that the counterparty can't counterfeit it, hypothecate it, or seize it. That's what causes it to have value. That's why silver and gold don't hold their value. That's why these other fiat currencies don't hold their value. That's why Bitcoin is going up in value faster than any other asset. That's why it's the most sound property in the world. Wealthy people and corporations are thinking maybe this is like the next monetary index. So once you know that, currency is coming, inflation's coming. Sell everything that people can make more of. Buy everything people can't make more of. Right? And what can people make? The politicians can inflate the currency. So don't hold dollars and euros and pesos. Another class of government bureaucrats can inflate the debt, the New York bonds, sovereign debt. So don't own that. So what can you own? Right? You move on to you could own stock, but the CEO of the company can create more stock. So you got to think hard about that. You could own gold, but gold miners can create more gold. You can own commodities. They've actually done really well because the demand ripped. But over the course of 5 years, companies can create more lumber. They'll figure it out once it's legal to show up to work, right?
Right.
So what is it that people can't really make any more of? Like Mona Lisa? It's trophies, trophy assets, Bitcoin, something which a dominant monopoly, 5 acres in Bridgehampton. But I mean, as long as anybody wants to live in Bridgehampton, your risk is the New York governor jacks the taxes through the roof and no one wants to live in New York.
Right.
And you can't move your house. That's why Bitcoin's better than 5 acres in Bridgehampton. Because if they jack the tax on Bitcoin in New York City, I can move it out of the city. But I can't move my building out of the city.
You can't transport it down to Tennessee or a more tax-friendly environment. I totally agree with you, and I think if we can get this message out to more people that are scared about, this thing that's unfamiliar, you fear what you don't know, and so I think that's what a lot of people are right now. They think that it's safe, it's cushy to sit there in their 401k, to continue to trade time for money, and and watch their U.S. dollar continue to be debased and printed when you have. Last year, was it 25% of all U.S. currency was created and printed last year in 2020?
That means your bonds had a negative real yield of minus 22%. You lost 22% of your value in bonds.
Right.
Yeah, people that are holding bond portfolios are living in fear. And a lot of people holding gold are living in fear because they're clinging to something in the past they thought was a store of value. If you're holding a bunch of real estate and there's a massive property tax on it every year, you're living in fear. And and so how do you find property that you can custody, that someone's not going to tax every year, or they're not going to steal from you, or they're not going to inflate away or hypothecate away? Right? And that's
right.
That requires, you got to do work. You got to do, you got to study and you got to learn something new. And the people that are fastest learners, they're going to jump on top of this the soonest. And the people that are the slowest learners, rich elites, they're not going to bother to learn because they get a lot of money. And if they own the S&P 500 index, they made a lot of money last year doing nothing. So they feel smart and safe. And Warren Buffett and Charlie Munger, they're not going to learn because in your 90s, when you've got more money than God, there's no catalytic event that'll force you out of your comfort zone.
Right.
People in Venezuela get forced out of their comfort zone. Right? You got to be jarred out of your comfort zone. And then you got to spend anywhere from 10 hours to 100 hours. And then you'll start to find a new set of tools. And there are some tools that are better than others. I obviously think that Bitcoin is the best tool. If you can't do that, find something truly scarce that you value.
Is that why Elon Musk was actually took your advice when you said to him, were you surprised, by the way, that he did this after you encouraged him to move out of, for Tesla, away from U.S. dollars into Bitcoin?
Well, he's a very decisive and a courageous executive, and so he generally moves with alacrity when he decides it's time to do something. And I think he does understand the challenges of sound money, and he understands that if you're sitting on top of billions of dollars of currency in a conventional treasury strategy, then you've got a negative real yield. And most people don't calculate the negative real yield right. Conventional treasury strategies for corporations are yielding 1% at most. And the money supply is expanding at 15% or more. You could argue 20%, you could argue 25%, depending upon what you look at. But if you track the M2 broad money supply, a number between 15 and 20% looks pretty likely on a year-to-year basis. So that means the negative real yield on treasury strategy is minus 15. And that means If you divide that into 70, it means you're cutting your entire treasury in half in about 4.5 years. That means in 10 years, you're cutting it by 80%. That means if you had $10 billion, you're burning $8 billion in the decade at the current rate. That's $8 billion of shareholder value. So as a fiduciary, you could probably look the other way when the monetary inflation rate was 7%. But when the monetary inflation rate goes to 21%, at some point it's irresponsible as a corporate officer to burn 21% of the money in your treasury every year because you're afraid to do anything different.
Well, he's going to be making an appearance this weekend on Saturday Night Live, and there's a lot of buzz about what he might say around Dogecoin. Of course, he loves to tweet about that. Here is Dogecoin at this hour. 59 cents was up to 67, back and forth, back and forth. What's your take on this type of coin and the buzz around it? When obviously you're a Bitcoin guy, but when you hear something like Dogecoin, what do you make of this? And what would you say to my audience about it?
I would say that the Fed is expanding the money supply at 20% a year, and they're buying $120 billion worth of bonds, and the EU is buying $120 billion a month worth of bonds. So you've got all of the bonds in the world being bought by the central banks. So investors have been squeezed out of bonds. You can't buy bonds with any decent nominal yield. The real yield on bonds and cash is minus 15 to minus 20%. That's created a mad scramble for a store of value for all investors, and so they've all scrambled into ETFs. And first it was the Spider ETF, and then it was other ETFs. There's 2,500 ETFs. Equities have become the store of value, and that keeps pushing people out because they've lost confidence in conventional strategies and conventional money, conventional bonds, conventional treasury strategies. Because they've lost confidence and they've literally lost hope, they're being driven to speculate more. And the result is the GameStop saga. The result is the Archegos saga, where they put on a huge leverage on equity. The result is the SPAC explosion, where people are literally buying speculative shell companies that do nothing but potentially do something that we don't know what, but they figure that's better than holding cash. They're being crowded into cryptos, and I think that the wise ones are buying Bitcoin because they understand that this is sound money for the next 100 years. But I also think that people are speculating in other cryptocurrencies, and it's not that different than the GameStop thing. People are looking for something other than to wait and watch their money get debased. I think also, it provides entertainment. People are getting entertainment from Robinhood. It's kind of fun. Dogecoin is fun, and if I take away the ability to go to a professional sporting event and gamble at the sporting event, then this is another way for me to gamble in the market. So I think ultimately it's good. It's understandable in the monetary environment. It's good for the crypto industry. It's generating massive awareness and massive enthusiasm. Lots of people are signing up. Lots of people are opening up accounts. I think there are 3 million people a week or more that are opening up accounts. I don't think that you're going to want to leave Dogecoin to your grandson or granddaughter. But on the other hand, I wouldn't begrudge you gambling on a boxing match or gambling on a basketball game if it were legal in the jurisdiction when you do it. I mean, what's the difference between that and buying a lottery ticket or just paying to go to the game, right? I mean, it costs money to do it. It costs $200 to go to a concert. And so if it's not allowed to go to the concert and I have the $200 and I'm bored on a Saturday night, what's my outlet? I think people are going to take a portion of their money and they're going to invest it in things they deem safe. And a safe thing to a savings account is like Bitcoin. And they're going to take a portion of their money and they're going to bet it on equity that might not be so safe. And they're going to take some of their money and they're going to gamble it on something which is just fun and a flyer. And sometimes they just do it to give the finger to somebody. And sometimes because out of frustration, what else are you going to do?
Well, I think the finger thing that I think you spot on. I think because I worked in the mainstream media for 20 years. I know how the belly of the beast works, and I see all the corporate mainstream media wanting to point the finger at the GameStop trader, the little guy who wants to be in Dogecoin. When the real, you mentioned SPACs. When you look at the massive speculation, I mean, here's an article just today from David Dayen. Financial speculation is about more than GameStop day traders. The real speculation is happening at the top of the market through skyrocketing merger transactions and increases in the power of the biggest companies and these special acquisition companies. So it's very easy to paint the little guy as causing all this hysteria when the real thieves are sitting at the top. Am I wrong?
Yeah, I don't begrudge any individual investor their investment. I think you got to give power to the people, right? I mean, you should empower the public. They're adults. Let them live their life.
Right. Like Mark Cuban said, I'd much rather buy Dogecoin than buy a lottery ticket. I think he's right about that. I want to get you out of here on this, Michael, which is, I don't know if you caught this interview or this piece that was floating around, Bill Maher the other night on HBO, taking the piss out of Bitcoin, of cryptocurrencies, and admits in this whole thing that he didn't even know really what he's talking about. I want to play this and just get your take on this.
And finally, new rule: nothing with crypto in the title ever turns out good. There is a mania rising in the country these days about cryptocurrency and how the train is leaving the station, so you better get on. Tesla has jumped in with both feet, and Microsoft accepts it for software now. Etsy accepts it now, and so does PayPal and Starbucks and Whole Foods and Home Depot. 1 in 10 Americans use their stimulus checks to invest in one of cryptocurrencies in existence, Bitcoin being the most famous, but there's also Ethereum, Binance, Tether, even one called Cumrocket. There's also one called Dogecoin that someone started as a joke, but as far as I can tell, it's exactly the same as all the other cryptocurrencies because the whole thing is a joke.
By the way, it sounded like half of his audience had invested in Dogecoin before they went into the theater. What did you make of Bill Maher's comments on this?
You could either just say it's indicative of the success of Bitcoin and the crypto industry in general, so that now it's something people want to roast. I guess that's the most charitable way to say it. He's getting laughs. I don't think he's invested 100 hours in Bitcoin to understand what it is. That much is clear. I imagine comedians made jokes about automobiles, planes, and trains. He himself, disparaged mobile phones,
Right.
back in 2003. So he's a comedian. I wouldn't take my investment advice from a comedian, right? I mean, there's hundreds of millions of people that disagree with him. But, if he says it funny enough, they might laugh. It's if anybody were to take him seriously, it would be a tragedy because, this is critical to the human rights of billions of people around the world. And so he's a little bit out of touch with the humanitarian elements of this. And, billions of women and children that are going to starve to death without the ability to store property so they can feed themselves in the future isn't really a laughing matter. I mean, he makes it into a laughing matter, but if I stripped away all of his money and kicked him out on the street and I closed his bank accounts and I let him wander around and then I said, well, Bill, we don't want you to lose electricity because there are some people, some rich Americans somewhere that don't like your use of it. it would seem a little bit cruel and insensitive, I think.
Yeah, like the story we talked about earlier in Venezuela. I mean, you have little kids sleeping in tents. I mean, this little girl sitting here with a mask, and this is her toy. It's a branch that she's sitting with while she's sleeping because her parents maybe get $3 a month, and they're moving into cryptocurrency. It's not funny to me. And I guess the thing that I have so much trouble with is he purports to be, a progressive of some kind and wants power for the people and doesn't want people to be ripped off by their governments or by, rich elites, etc. And he says in this piece that he's getting advice from Warren Buffett and these other old rich white guys who are part of this, old system. So
He's
that's
elitist and out of touch.
all right.
But hopefully, maybe he'll get some feedback following this monologue, and he'll go do the research, and he'll realize that this is monetary electricity for 8 billion people on the planet, and depriving 8 billion people of thermodynamically sound money and a digital monetary network is just as cruel and non-progressive as turning off their running water or their electricity or depriving them of antibiotics or any other modern technology. We might as well strip away everybody's automobile, plane, and train from them because someone's got a problem with energy usage, right? I mean, it's
Right.
It will be looked back as laughable in a decade. Right now, it's only funny because half the people don't really understand how the energy gets used.
Well said. My guest has been Michael Saylor. Really appreciate you joining us here on the show. It's been a real treat. We'd love to have you come back more often. Our audience was really excited about having you here. So thank you for being a voice, especially when we talk about oppressed people and bringing this education to the world. So thank you so much for what you do. Really appreciate it.
Yeah, thanks for having me.
Absolutely.